Welcome back to Information Week's ValleyView. Fritz and I went down to MC an event in the Valley earlier this year called Under the Radar, and they invited a keynote speaker, a special one, the global CTO of one of the largest financial institutions in the world, Yobie Benjamin, to come speak. He gave a spellbinding presentation, had people roaring in laughter, and we decided to invite him here on the show. Yobie, thanks for joining us on Information Week's ValleyView.
Nice to see you again, Dave.
Great to have you. So, you control the assets, the digital assets for a giant institution, global, worldwide. We won't name the name of the company because they don't like to be featured too often. But what are the biggest challenges that you're facing as a global chief technology officer right now in an industry that's undergoing a tremendous amount of change?
I think the biggest challenge for financial services industries, and not only banking, but it probably could include insurance, is scale. And what does that mean? We're used to operating enterprise scale solutions. We have enterprise scale databases, we have enterprise scale messaging systems, we have enterprise scale this, enterprise that. But when you move to the internet, that's a totally different scale. That is internet scale. Now you're thinking about, you know, not only petabytes of data, but petabytes of data at transaction levels that must exceed 500 milliseconds. It's kind of like your search thing. You go and do that search bar, you don't expect to wait more than 500 milliseconds. It's got to be less than that. So scale, moving from an enterprise architecture to internet architectures, is probably the single biggest challenge that many financial institutions will face.
Let's dive into that for a second, because financial services companies spend about 14% of revenue on IT, probably the highest in any industry in the world, right? Cool. So you've got more data, you just talked about that. You've got more regulation. How can financial institutions continue to spend that kind of money in an economy such as ours with the explosion of data such as you described?
So that's an interesting question. If you look at enterprise solutions, tend to be very proprietary. You know, proprietary equals expensive, you know? And while most financial institutions are trying to reduce cost, they're not actually trying to reduce efficiency. You know, there's a difference between just cutting costs just for the sake of cutting costs versus driving for efficiency and taking out systems, for example, that have been running institutions for like 20, 30, 40, 50 years. So the movement to internet scale technologies is, I think, will actually be cheaper for financial institutions, because I can tell you, I think many people here know that, without naming some of the companies that you poked around earlier, that, you know, they're kind of expensive. But yet, you know, there are also some technologies that fundamentally run the internet that are running on open source.
When you say you're driving towards internet scale, I just want to make sure I understand. In a previous life, you had self-contained systems behind the firewall. There was no internet to worry about, and there was a lot of data moving back and forth to support various business processes, correct? But you're saying moving to internet scale. What is the force that's pushing you to internet scale? Is it the internet itself? Is it that fact that a lot of that process now gets pushed onto the internet? Is it the fact that you have customers and a large number of constituents who are generating additional data that's connected with the institution's business on the internet? I just want to make sure I understand.
So financial institutions, because they're heavily regulated, and again, you know, most regulated industries, pharmaceuticals, insurance, and financial services industries, because they're very heavily regulated, they have to go and, you know, spend an inordinate amount of money protecting everything within what you just mentioned, that firewall, right? And regulators on all those types of industries say, you got to do this. The problem is the consumer base, you know, wants you to go to the internet. And that's not just in the consumer side, but also in the business side.
Online banking.
Mobile banking.
Right.
The list is a very, very long list of what you don't want to settle your insurance over, you know, the telephone or writing a long letter. You want to go online and you just want to go say, click, 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 done. I'm done with that. So that trend continues. And changes in consumer behavior affect business-to-business behavior, because what you're experiencing your iPad and your iPhone and your Android, you expect the same level of performance, you expect the same level of experience with your business applications. You expect the same level of ease. You expect the same level of interactivity. That's what's forcing everything to the internet. It's like, it's the push from below that's telling these financial institutions, insurance companies, pharmaceuticals to go and say, God, we have to go and change the way we do things. Our customers expect it, both consumer and business.
So as the CTO of this big global company, what one or two technologies are coming up time and time again that you are getting excited about in light of what you've been talking about here? Not the old school stuff, but the stuff that's coming from, the consumer push from below, or things that are coming from internet startups. What excites you most?
I think the word I would use is what interests me most. Because being in Silicon Valley,
it's hard to get excited.
Every day you get excited. I see roughly about 100 startups a month. Just coming over and saying like, can you look at this?
That's a lot, yeah.
So it's not. But what's interesting is basically is the competition between the giants and though in the area of commerce and payments. You'd think that commerce was already settled a long time ago with Amazon and PayPal, but no, it's actually just begun. So you have companies like a massive search giant in Mountain View with their wallet,
Google.
a great, yeah.
It wasn't a contest, David. But good. Ding, ding, ding. You got that right.
You get a prize.
There's an operating system company in Redmond, There is a payments company in San Jose, and there's a great fruit company in Cupertino that are all in this space. They're all trying to find a piece of the action because global commerce and the movement of money is in the trillions of dollars. So then you have all the other startups, the Dualis of the world, that go and say, yeah, we're going to go in there too, and we're going to change it. The unwritten rule, the unwritten secret, is that despite all of this innovation from all of these companies, there sits a bank. You cannot transact anything without a banking institution. You cannot go and do what you want, make it more efficient, without a banking institution or touching the financial services industry. Because you have to deal with credit cards, you have to deal with debit cards, you have to deal with prepaid cards. And guess what? These cards are basically backed up by the underlying assets of the various financial companies that issue them. You wouldn't want, let's say, startup XYZ and say, yes, keep my money in escrow, and then we've heard this story before where either the company's mismanaged or there's malfeasance, suddenly company goes bust, and suddenly $100 million, 200, whatever the number is, just disappears. There has to be a balance sheet that protects the financial transaction.
And to your point, I recently signed up for Google Wallet, and the first thing they do is they either say, well, you can set up this one credit card that's kind of connected to Google, or you can tie it to some other existing credit card. So obviously that's where they're providing the payment infrastructure at the top level to do the transaction, but underneath, the financial industry is essentially taking over that transaction.
Well, the other thing too is like, this is a global village, like global village, global economy. A lot of the startups, they're going to go like, we'll work everywhere in the United States. You know what? It doesn't really work that way. I mean, the fact of the matter is global commerce is global commerce. You're going to transact with Europe, you're going to transact with Japan, you're going to transact with Africa. You're going to transact with Brazil. You're going to transact with all these companies. So the notion of a globally acceptable, way of conducting commerce is essential. And guess what? Only the financial institutions can actually provide that.
It's a real perspective of a global CTO, by the way. I just want to ask one question. PayPal, so we could ask the question from the consumer side, which one of these automatic or a mobile payment system should you go with? Should you go with Apple? Should you go with PayPal? Should you go with Amazon? Should you go with Microsoft or Google? But really the question is, if you're a business, where do you place your bets? Because not every business takes all of those different forms of payment. And now I think I'm walking in now. Home Depot, I think, takes PayPal. I think I've seen that recently.
Yeah, yeah, that's true. So let's look at the history of credit cards very quickly, right? In 1959, which I believe was around the late 50s, early 60s, when Bank AmeriCard first became the precursor of Visa, right? It used to be that stores would only take Bank AmeriCard. Then it only became Visa only. Then it became Visa MasterCard. Then it became Visa MasterCard American Express. Then it became Visa MasterCard Discover, and et cetera, et cetera. You go to Japan, you get JCB, and so on and so forth. You used not to take debit cards. You would only take credit cards. The fact of the matter is, as long as the facility, the mechanism will provide you revenue and cash flow, the merchant is likely to take it. I mean, at some point, the fees associated will come into play. Mm-hmm. But as long as it represents a critical mass of cash flow coming into a merchant, they'll take it. And, they come hand in hand. Merchant acceptance goes hand in hand with consumer adoption. If no merchant takes it, the consumers don't want it. And if no consumers use it, merchants don't want it.
Chicken and egg problem.
It's a chicken and egg problem.
I mean, this is a market in upheaval, is what you're describing. But we are seeing micro-lending. We are seeing, and yeah, the banks stay where they are, and the banks take their cut of it. But every other piece of the ecosystem is being cut out. So what makes this, you said it was interesting. What about all of these trends is interesting from where you sit?
From where I sit, I think the globalization aspect of this makes it very interesting. 80% of the world still really doesn't have real access to core financial services. And to be able to bring financial services to that 80% of the world, or 70, whatever the number is a really exciting thing. Now that excites me, to see, a goat farmer in, pick a country in the Sudan, having a mobile phone, having the ability to transact with the next village, move money from one person to another. That greatly expands that goat herder in Sudan, northern Sudan, wherever, their ability to conduct commerce. It used to be they could do it person to person, door to door. Now they can do it to the next village. Now they can do it to the next province. They can even do it internationally. Those are the things that excite me. Is that a short-term thing? I think it's shorter than what people think, because the adoption of mobile phones has been dramatic in this 80% part of the world. Right. And I believe that financial services will come very, very close in the heels of the mobile phone industry.
Well, Yobie, we're out of time. I think we could sit here and talk to you for another hour if we had to, because you have so many fascinating things to say. We give all of our guests on the show Information Week ValleyView mug.
Excellent.
Something to take home, and so you can remember us. So hopefully you won't forget us.
No.
It's always great to have you. Will you come back?
Of course.
Okay.
See you, David.
Thank you very much.
Right.
Great
And
to have you.
and thanks for mentioning goat herders, because that's what he wants to do.
I'm looking forward to doing some goat herding at some point. Stay put for 1 second.